increased by close to around, from 1.5 billion rupees to around 5.79 billion rupees. That's around 580 crores. So 149 crores has turned into 580 crores or 579 crores, and that delta is what is reflected in the decline in the net profit as against street expectations by about 150 odd crores as well. No problems when it comes to the asset quality. Gross NPA 1.73. This compares with 1.72 the quarter ago. Net NPA has actually seen an improvement from 0.37. It's come to around 0.34. So that explains the improvement in net NPA, largely because of the increase in provisioning. The NII has been in line with expectations. We're just looking at all the other details which are flashing by as well. But for now, it looks like the profitability has been slightly below expectations, largely because of higher provisions.
Yes, and I think that the street likes the NII. That's the reason why the stock has actually moved up to around 0.8% in terms of a gain at this point. So I think the street is quite happy with the NII performance. But
and there is some clarification on the provisions as well, where the company is saying that they provided roughly 190 crore rupees in the quarter for investments in AIFs. So maybe they are, providing for their investments in AIFs, as a result of which the provision number has increased, and that has meant that the net profit is below expectations. But no problems with the NII. Asset quality looking good. Important to find out what the loan growth is, because the street expects around 16 to 17% advances growth coming in for Kotak Mahindra Bank. So the street is now ignoring the miss on the net profit, looking at the NII and the improvement in asset quality, and as a result of which the intraday chart of the stock comes up for you. A big move is what we've seen from the lows, currently sitting with a gain of about 1.5%, but from the lows it's seen a decent recovery, moving towards the higher end of today's trading range.
Okay, well, in terms of the gross NPA also, it's just a marginal move higher of around 3.5%. But if you compare it on a year-on-year basis, they're standing at an gross NPA on an absolute basis at around 6,301 crores as compared to around 5,994 crores. I'm talking about year-on-year. If you look at it on a Q-on-Q basis, it's much more subdued. So 6,300 odd crores compares to around 6,087 odd crores. If you talk about the net NPAs, that actually has been lower on a sequential basis. So it's around 1,225 odd crores as compared to around 1,274 crores in the previous quarters. So that is actually a reduction which has come through of around 4 odd percent. So there are a couple of positives which have come through, which we just want to highlight, is that they have clarified with regards to the provisions why exactly they are higher this time round, because there is a significant jump. The NII is better than expectations. The gross NPAs as well as the net NPAs have been largely stable this time round as well. Ashutosh Mishra, who's the head of research institutional equities at Ashika Stockbroking, joins in with his quick take. Well, Ashutosh, thanks very much for joining in. What is your first take on Kotak, and what do you want to hear from the management?
The most important, the result looks quite good. The way I have not seen the number in very detail just now, but it looks on a first basis that we have a lot of positives also. But what we require to more look from the new management, that what is their strategy, especially strategy on the deposit front, and know how they are going to tackle the deposit growth so that they are able to participate in the loan growth going forward from here.
All right, and of the numbers that we have right now, provisions have increased. That's largely because of their exposure to AIFs, and that's dented the profitability by a little. Would you worry on that, or you think this is par for course and there are other more important parameters to look for in Kotak Mahindra Bank than just that?
So this AIF provision is across the private sector banks we are going to do this, because RBI has found out that this was a loophole which few banks may be misusing it. Kotak may not be misusing it all out there, but yes, RBI has come out with the regulation that banks need to provide on it, so that every bank who has this type of exposure needs to do it. What we're trying to know is that what type of structure bank has used in this part, and is there any risk post the RBI regulation coming into this area? So we just need to understand a little bit more on that front. But I don't find it to be a major concern area at this point of time.
All right.
Okay.
Just looking at some of the back of the envelope calculations here, turns out that maybe advances growth year on year could be close to around 15.5%. But we'll let Abhishek do those calculations. Abhishek, I believe, has done his early set of calculations and has joined us. Abhishek, of the numbers that are reported so far and what you've seen so far, what does it look like for Kotak Mahindra Bank?
Mixed set of numbers. To begin with, loan growth looks to be pretty strong, about 4.5% as per my calculation on a sequential basis, that is quarter on quarter. However, operationally, it's a weak quarter for Kotak Mahindra Bank because operating profits have declined by 1% on a sequential basis. All other banks have seen operating profit growth on a sequential basis, but Kotak Mahindra Bank is perhaps one of the few lenders who are seeing operating profit decline on a sequential basis. So 4.5% growth of loan have actually aided the net interest income this time around, and it's higher than our poll. In terms of provisions, as you guys have been discussing, provisions are up 58% quarter on quarter. We need to see whether this is only on account of AIF. I don't think so. It's only on account of AIF because of two key reasons. One, gross NPA in absolute value have increased by 3.5%, while net NPA has declined by 3.9%. So we need to look at the credit cost that has come in this quarter, and it may be on the higher side than what analysts were pegging in. And that is why, on account of elevated provisions due to AIF and slippages, which might have, increased on a sequential basis, you are seeing profit below our poll. Back to you.
Okay, well, that's a very good point to take forward, because that's the next question I wanted to actually take forward is the slippages. We have Rahul Malani, who's the equity research analyst at Sharekhan, joining in with his quick take. Rahul, slippages were around 1,314 crores in the previous quarter. They have ranged within that space. What was your estimate for Kotak's slippages this time? We're waiting by for the absolute figure. But what, according to you, would be an inline number? What, according to you, would be a disappointment?
So anything slippages about 1,300 crore will be a disappointment, because we were working with an estimate of around 1,250 to 1,300 crores of slippages this quarter.
Okay. The other key point, which I think the street would want to watch out for, is also the stability in the net interest margin, something which, deterred sentiment with others. What is your sense, Rahul, in terms of what exactly the consolidated or standalone net interest margins would be for Kotak? What are you anticipating? Again, what is your parameter in terms of in line to maybe a disappointment?
See, if you look at the net interest income, it has grown by sequentially 4%. So my understanding is that the NIMs are flat quarter on quarter, and due to the one of the reason, because last quarter there had been one of around 15 to 20 basis points in the NIMs. And despite that, cost of funds have increased for this quarter, but NIMs have remained stable because of the one-off effect in the last quarter. So adjusted for that, NIMs have declined by 15 to 20 basis points this quarter. But it is looking at a flat because of the last quarter base effect.
Okay. Ashutosh, you have had some time to pore over the numbers, listen to all the analysis that has been going on so far as well. Have you, is there any more perspective that you can add to what we have so far?
So, if you look, on a NIM front, I clearly see that across the bank, we are going to see some margin compression. Because cost of fund is now increasing much higher than the yield on fund. Yield on fund was, we had seen increase earlier, and now the cost of fund is catching up. So this trend will continue. Even if suppose the bank is not showing any margin dip in this quarter, probably we would like to know from management that what will be the trend going forward from here on that front.
Okay, Ashutosh, one of the things that Abhishek in fact brought up in his link is that we need to see more granular details in terms of the provisions. So while there could be a component of AIF, do you think that would be the majority reason for the uptick that we've seen in provisions? And what would you like to hear about it from the management?
Yeah, I think so, because almost all major private banks has somewhat of other exposure towards this AIF, and whatever increase in provision we may be seeing at this point of time can come from the AIF portion of it, because other than that, we are not seeing any major negative impact on the asset quality. So yes, what we'd like to know more on that front is that from what type of exposure the bank has on that account, and going forward, what is their strategy to address the regulatory concerns which arise post the RBI notification on this matter.
All right. Finally, gentlemen, before we let you go, your call on the stock quickly. Ashutosh, you go first.
So post the management change, more positive. I think this was the biggest hangover on the bank, and now this hangover is getting addressed. So we'd like to look about the growth strategy and how we want to take it forward from here. And given the type of growth prospect Indian banking has and the way Kotak is positioned itself, I see the good prospects of the bank in the near future. If I rated, yes, revisit after the management call.
Okay, Rahul, your call?
So we have a positive view on the stock, and we have a target price of around currently at 250 rupees.
Oh, okay. All right, Rahul, as well as Ashutosh, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So Kotak Mahindra Bank holding up with a gain of around 0.9%, almost a percent post its numbers. But remember that there will be more details during markets for Kotak Mahindra Bank because they will be coming out with their presentation soon enough. So that will have more details. But the real meat in terms of the slippages as well as the granular details in terms of asset quality provisions going forward will be from the press conference this afternoon at 3:15 p.m. So stay tuned for that. Welcome back. Well, it is moving higher for Kotak Mahindra Bank because one of the key concerns for the market was any kind of disruption in terms of net interest margins, which has absolutely been flat on a sequential basis at 5.22%. And overall, it seems as though the numbers are looking good in terms of the incremental details which are flowing in. So net interest margins unchanged at 5.22% sequentially for Kotak Mahindra Bank. We'll get more details as the presentation uploads on the exchanges and, more of the details once the press conference takes place at 3 p.m. this afternoon. But let's shift focus back on the PSU space. We have Hormuz who's joining in with an interesting piece of data on government stake in PSUs. Hormuz, over to you.
You know, it's that kind of a day, right? This PSU rally is showing no signs of slowing down, and it is only ensuring that the government laughs all the way to the bank whenever it decides to monetize it, this stake, that is. Now, as of today, there are 19 government companies where the government owns more than 75% stake. and at the current price, that stake is valued at 2.4 lakh crore rupees. Now, out of these 19 companies, there are 9 of them where the government stake is in excess of 90%. Now, most of the names in this list are the smaller PSU banks like UCO Bank, Central Bank, Punjab and Sindh, along with India's largest insurance company, and that is LIC. Now, when we first reported about this in July last year, that excess government stake was worth 1.5 lakh crore rupees. When we did a follow-up in September, that stake was worth 1.9 lakh crore rupees. And now 4 months later, a further 26% surge has taken the value of the stake to 2.4 lakh crore rupees. So which are the companies where the value of the government stake is the highest? Unsurprisingly, it's LIC. Now, having sold only 3.5% stake during its IPO, the government still owns 96.5% stake there. Now, that excess stake in LIC as of today's price is worth 1.2 lakh crore rupees. However, in this case, the government has time until 2032 to comply with the minimum public shareholding norms. Now, next on the list is IRFC. Actually, IRFC is everywhere these days. The government still owns an excess 11% stake in this railway financier, which if it plans to monetize, will fetch them a handsome 22,500 crores. And as I highlighted earlier, the smaller PSU banks where the government owns more than 90% stake, these are the ones that complete this list. Now, barring LIC, most of these PSUs, other than these smaller banking names, have seen a stellar run over these last few months. IRFC is up 4x, Mazagon Dock has tripled, HUDCO has tripled. Even a stock like General Insurance Corporation, which we don't speak about as frequently as the others, has doubled over the last year. But harping back to IRFC, why this should also be in focus? Because its lock-in period is ending on the 29th of January, which will mark 3 years of its listing. Now, that will make 261 crore shares of IRFC, or 20% of its outstanding equity, eligible to trade. Now, that's according to a Novama note. Now, 2023 was the year of PSUs. 2024 has begun on a similar note. The government is very much in the money, and the ball is now in their court as to when they choose to rake in the mullah.
Indeed, Armas, thank you so much for that. But who's also in the money is someone who would have bought Kotak just 15 minutes ago. Currently, right now, is up 2%, and that's as we get some more details coming in. 289 crores, the total slippage is already upgraded within the third quarter. But the important number was the slippage number that came in close to around 1,100 and some change crores. This compares with 1,300 crores, which was there at the same time last quarter. So the slippage line should come up for you on the screen. A little over 1,100 crores is what the company has reported in terms of slippages. That's better, at least in the last 3 quarters data that we have right now. Last quarter, it was 1,300 crores. The quarter before that, it was close to around 1,200 crores. So there you have it, 1,177 crores the slippages. And we've seen 289 crore worth upgrades already. The asset quality in the second quarter was the best that we saw in 33 quarters or more. And turns out that there's only further improvement to that. And this is something that the street perhaps is now taking note of. We've seen a bit of a further spike in the stock price. Slippage is manageable. We have provisions which have been elevated. We have some details on that. 190 crore of the increased provision goes into, is on account of the AIF. And as Ekta pointed out at the start, that the NIMs at 5.22% are also unchanged at a time where a lot of the banks are actually seeing some sort of NIM compression.
Well, just want to point out, and add to what you said about the asset quality, that they've also indicated that 289 crores of the slippages were already upgraded this quarter. So I just want to know what the absolute figure was. Is it included within that figure that we're flashing, or is it X of that? But nonetheless, and the other point is that now we know what that AIF provision was. So 389 crores still is higher on a sequential basis when it comes to provisions. And I think the street would just want to know what exactly it consists of. What would the trajectory be in terms of provisions going forward? But nonetheless, I think the granular details are working in favor of Kotak. Lower slippages to 89 crores upgraded, as well as the net interest margins, which are completely, which are maintained on a sequential basis. And
what's also interesting is that we have some more details on the deposit growth. 18.6%, not particularly bad at a time when a lot of the banks are seeing slower than expected deposit growth. So 18.6% deposit growth is what Kotak Mahindra has reported. So, yeah.
And just the fact that the stock is coming off, I would assume could also possibly be to do with the provisions which are X of AIF, which is also what the analyst had pointed out. So I think that would be critical, and maybe that's the reason why the stock is off.
All right. What we'll do is we will get more details from Kotak Mahindra Bank as and when incremental details do pour in. But stay tuned. At 3:15, we will have the management addressing the press too, and giving you more on these numbers. As of now, the stock holding up with a gain of about 1.5%, meandering between this 1 to 2% sort of move. But it's the union budget, which is less than 15 days away. What is your wish list for the finance minister? Here's presenting to you the CNBC-TV18 budget ballot. Now, instead of looking at just the ballot box, you can also share your budget expectations with us on our website. Hang in there, open your phone, scan the QR code which is there on your screen, and you'll be redirected to cnbc-tv18.com/budget. If you can't, then go log on to the website, the same one, cnbc-tv18.com/budget. It's for you on the screen.
Welcome back. Well, for the markets overall, it has given up gains, so just about flattened out for the Nifty. We have the mid-cap index, which is up around 0.6%. Kotak is now sitting with a gain of around 1.8%, so still negotiating with its numbers at this point. But nonetheless, let's talk about Reliance Industries, which did come out with numbers yesterday post-market. Sonia joins in with the details.
Well, thanks a lot for that. For Reliance, across segments, they had a good performance, especially in the retail segment, which was a stellar performance for them, and Reliance Jio, which reported stable earnings this time. But let's take a look at what brokerages are saying. Morgan Stanley has an overweight with a target price of 28.21 on Reliance. They say that the company reported the slowest investment capex in the last 2 years. Gas production is what drove the numbers this time around, and the net debt was flat. CLSA has a buy with a target price of 3,060. They speak about how capex has fallen to an 8-quarter low for Reliance. Macquarie has a neutral on the stock. They say the key positives this time was the very strong retail performance that Reliance delivered and a solid Jio subscriber addition as well. Nomura has a buy with a target price of 31.65. They talk about a sustained healthy performance for Reliance, and both the consumer businesses, Jio and retail, are picking up pace, and there's a sharp uptick in the upstream business as well. Finally, Jefferies has a buy with a target price of 31.40. They say Jio saw healthy subscriber addition. The oil to chemicals profitability declined on maintenance and lower spreads in refining and the petchem space. So largely positive outlook from most brokerages. Back to you.
Positive outlook from most brokerages indeed. Reliance retail business is doing extremely well this time around. The stock holding up with a gain of about 1/3%. Take a short break, come back, get you more of the markets and individual stocks.
Welcome back. Well, for the mid-cap index, it's holding with a gain of around 0.6%. We have the Bank Nifty, which is, picked up a cool 300 odd points at this point in time as well. So it is definitely going to be a much more interesting trading session when it comes to specific stocks. Kotak Mahindra Bank is now speeding away with a gain of almost around 3 odd %, just shrugging off any kind of concerns, may it be deposits, may it be provisions. Right now, the street only likes what it sees in terms of the slippages, in terms of the net interest margins, as well as the NII growth. Well, with that, we need to wrap up on the show. But thanks for watching. We have Business Lunch, which will take all of the action this Saturday forward.